All right, good morning, guys. Welcome back. Got our cup of coffee here, and we're going to talk about some gold and silver mining ETFs and also some stocks. So I want to get right into it. Let's use the Elite Stock and ETF Research tool, the one that is in the description. If you're interested, you can check it out. Let's type in GDX, and let's find information on the VanEck Vectors Gold Miners ETF is the one that should pull up here. So I want to show you exactly how this tool works, and also we're going to use this to make our video today, or to help out. So here we are. This is going to be GDX. No, we don't want IDX. I typed in IDX. That's interesting. Now, I had no idea this one existed. So we're just going to go over this real quick because IDX, very interesting. $16 per share. So if you're interested in IDX, check that one out as well. But we're actually looking for GDX, and I want to take a look at where the price of the gold mining ETF has been trading. And also, I'm trying to learn more about it because I've seen a video about it on YouTube, and I want to do more research. And then on top of that, you should do more research than this as well. You should really dive in layers. But this can be a helpful tool if you're looking for information on a specific stock or an ETF as an investor. And so right now we have the VanEck Gold Miners ETF, which is basically up 70+% in the last year. And if we look at the objectives of wealth building, retirement planning, and all that kind of stuff, if somebody's trying to build income as well, perhaps it even says. So as of September 24th, we're trading at $73.71. Is that accurate? Yeah, just about. I mean, the price is changing, obviously, in real time. But yeah, $73. Now it's saying it has $80 or $90 price potential, $80 in the next, I would say, honestly, within the next 6 months or even 3 months potentially. So I'm just saying like $80 is not that far off. $90, 24-month target. So there it is. And we have 55 gold mining companies. Newmont. So we're going to talk about Newmont in just a moment. Barrick is a good one as well. We've talked about Barrick. The ETF's expense ratio is 0.51, positioning it within its peer group. Over the past year, GDX has delivered a total return of 71%. So that's roughly correct. If we look at, 77% in the last year. So around 70+% return for VanEck. And then we can also look at GDXJ next. And so if you look at what the actual expense ratio is, though, just to confirm that it is 0.51%, it's good to double check here. This one says 0.53%, but it looks like this one says 0.51. So the actual, that's the AI overview again. Here it is again on ETF database, 0.51 expense ratio, just to double check. So yeah, guys, you can get all the information consolidated, though, on this website. That's what makes this so helpful, is because if you have any questions on a ticker symbol, you can get the details right in front of you. So that's GDX. Now let's put the J on the end, and let's look at GDXJ, which is the VanEck Vectors Junior Gold Miners ETF. And I like this one as well. We're also going to look at Newmont, Barrick Gold, and a couple others here. Let's see. So GDXJ offers exposure to small and mid cap. So we're focusing exclusively on the small cap companies, presenting an opportunity. It says income generation and wealth building. So I guess it could be income generation if there's dividends. And what I also think about, not just with income, is also covered calls and cash secured puts. You can always do the wheel strategy for those of you guys who are interested in sacrificing some of the upside potentially and, getting more of an income focused approach. GDX and GDXJ are two ETFs that you can kind of combine for instant diversification into the gold mining sector. And you can start to do cash secured puts, all that kind of stuff to generate that regular income on either a weekly or a monthly basis. It's really exciting to think about, especially with the liquidity in these ETFs. Now, if we think about, excuse me, the fundamental analysis, so they generate at least 50% of their revenues from gold and silver mining, focusing on small and mid-cap firms with growth potential. Expense ratio of 0.52. Alamos Gold and Pan American Silver. We talked about Pan American Silver, I think, in another video. We have Harmony Gold Mining. We mentioned that one also. So we have some of the smaller cap ones. And even those smaller cap ones are really starting to blow up here. So we have Alamos Gold is a really good company from my understanding. $80 plus support level is the bottom range, and then 110. So we have a range of 80 to 110. Right now, we are trading at $94.83. 94.83. So just about, 94.83 for GDXJ here. In the last year, we're up 85%. So doing better than GDX, but we're also taking more risk, and that's the main thing. So a decline in gold prices, that could be a factor that sends this ETF down. geopolitical instability in key mining regions, operational failures, or major incidents or accidents in a specific holdings, especially if it's a larger holding. You can allocate 5 or 10% portfolio of your own portfolio to GDXJ according to the implementation strategy. Once again, consult with a financial advisor with all of this. This is just for entertainment purposes, and it may not apply to your specific risk tolerance and investing goals. So always keep that in mind. That's GDXJ though. Let's move on and let's see actually where gold is trading at right now. So as gold is, will gold go to $5,000 an ounce? Yes. I've been saying this since 2018, and people thought I was crazy for saying $100 plus for silver, right? These are not super unrealistic prices. 5 to 10,000 for gold is reasonable, especially given all the inflation we've seen. I mean, it makes sense that we would see those prices, and I think that's exactly what we're seeing. Yes, we're down today, but over the last 6 months, we're up 25%. We're up 40% in the last year. And am I saying you should just load the boat and go nothing into gold and silver? Absolutely not. But the thing is, like, this has been an ongoing trend. And if you would have listened to Peter Schiff and all these guys, and I'm not, saying that you should have or that he was 100% correct either, but he did make some fair points about the gold and silver market and all the inflation. And a lot of what he said is coming true. Not all of it. It's not a huge collapse where, maybe we do see some hyperinflation event. You never know. Anything's possible, I suppose. But right now we are seeing gold and silver prices go up, and the trend is your friend. And so if you would have bought gold and silver back in 2015 when he was saying it was a really good investment and the market was down, then you would be up pretty good. But it's all about where you enter, because ultimately the NASDAQ has done very well. Tech stocks, NVIDIA. You could have bought NVIDIA and you would have crushed any kind of gold and silver returns, right? So you could have bought Palantir for that matter. So there's all these opportunities. We discussed Palantir numerous times in the channel previously. And so Newmont Mining, right? This one is at $84 a share. We've discussed this one when it was $30 a share, guys. I kid you not. If you go back to 2024, when this thing was trading under $35 per share, and there is so many people bearish on this stock, and there's so many people saying that, oh, it's just a boring, large, bloated, stock. But look at the yield shrinkage. This thing used to yield 4 to 5%. Now, there was a dividend cut, from my understanding, with Newmont. That being said, and we can verify actually what the dividend might be right now, 25-cent quarterly amount. So did they actually cut their dividend, or is it just the price appreciation? I'm pretty sure they had one single dividend cut. But that's still cool. You get a dividend for owning a gold mining stock, and that can help out if you're looking at income solutions. So when we think about Newmont, this one trades in the New York Stock Exchange. I'm just trying to find the specific information on the dividend. It looks like, though, it pays 25 cents, so $1 per year. And at the current price, that's not that much. But at $35 a share, $1 a year would have been, let's just say, a little bit higher, closer to 3%. So even with that dividend cut, you would have been getting a 3% yield back when it was under $40 a share. But those days are long gone. So you've missed your maximum point of opportunity with all of this. That's why I say the trend is your friend, because this has become a momentum trade. And I've said that in previous videos. People think that the trend will continue forever, but eventually the trend will reverse. Nothing goes up forever, and there's no possible way that this is an exception. That being said, I'm still bullish on gold and silver going into 2026, and I think they can continue to do well, and I think we can continue to see 5 or 10,000 gold, especially if we get some type of geopolitical event, unfortunately, or some type of major event that happens that results in more fear entering the market. Now, Newmont Mining is a compelling investment opportunity for income generation and wealth building, underpinned by its status as the world's largest gold producer and its strategic growth initiatives. The recent acquisition of Newcrest Mining, there it is. I think we already saw that one. Newcrest enhances its operational scale and resource base, positioning the company for sustained growth. Despite recent leadership changes, including the resignation of CFO Karen Ovelman, the appointment of Peter Wexler as interim CFO demonstrates continuity in financial stewardship. So it's currently trading at $83.94 right now for Newmont. If we take a look at where we are with Newmont right now, we are trading at $84 right now per share. In the last year, we're up 50%. In the last 5 years, we're up 36%. In the last year, we're up 80%, though. That's pretty good. So not bad at all. So yeah, just around $84 a share. So we're looking at $90 to $95 upside. They have a buy rating on it. So here we are. We have position sizing, allocate 3 to 5% of your portfolio, and think about your entry strategy below $80 if you can enhance your yield and cost basis. and improve your cost basis. So there it is. There's Newmont Mining. We have our support and resistance levels anywhere from a range of $70 to $95 is what you're looking for on the downside and the upside. It is neutral though, actually, which is interesting. And the valuation itself, it says potential upside is 7.5%. So fairly neutral, I guess, in terms of where they think the price can go, or the AI mystery team thinks the AI can go, right? So let's look at Newcrest, though. I'm curious about Newcrest Mining stock. And Newcrest Mining, if we think about where's the actual ticker symbol? Is it ASX? Let's see here. It's acquired. Oh, it's no longer traded as a separate entity. So it would be under ASK or ASX stock. So I guess we can't really find Newcrest. Okay, let's find, there's Harmony. If we think about, what else would there be? There's other stocks out there, and I had BTG pulled up. That's another dividend payer. I've always liked this one. And this one's under $5 a share. So for those of you guys who want to buy a lot of shares and load up on a company that's at roughly a $9 billion Canadian market cap, what is that in terms of US dollar? Well, we can find out. The equivalent would be Canadian dollar to US dollar. So 8.98 Canadian, $6.47 billion market cap US. So we're at a $6.47 billion market cap US dollars based. And, at $5 a share, you can buy this on the New York Stock Exchange. Here it is. So B2Gold. Now, when I say a dividend, where is that dividend, right? We want to see the dividend. Where is it? Well, let's find out. BTG or B2Gold Corp. Let's do a search on it. Let's generate a report. And you can actually download these reports too, which is cool. And we're working on improving this. Like I said, it's not perfect. There's bugs on it, but we're working on improving this. And so it's something that you can think about as an investor. Now, this one says, okay, we don't want big. We want BTG. Jeez. That's the only thing too, is like when I'm typing it, and you got to make sure you put in the right ticker or you'll get something totally random. Sometimes you'll think it's hallucinating, but then it's like, oh no, I just have the ticker symbol wrong. So you actually put an individual stock and ETF. Here it is. BT Gold presents a compelling investment opportunity for income generation and wealth building along with a moderate risk tolerance. The company operates 3 low-cost, high-margin gold mines in Mali, the Philippines, and Nambia with a robust pipeline of exploration projects. BTG's strong financial health, consistent dividend payments, and strategic growth initiatives position it favorably in the gold mining sector. Our 12-month price target is $4.25. Now, what's interesting is that it says upside, but actually if you look at what that means right there from, it's currently trading. Now, it does get the price wrong, I think. Sometimes it doesn't. Or is that 347? Is that accurate? Let me see here what the actual... We'll find the dividend here in just a minute. So it's at $4.92. So this is not actually entirely accurate. So from that current price, though, it would be good upside. So it is a buy. So you have to be careful. Some of the metrics, sometimes they are not perfect, but we're working on it, like I said, or I'm working on it since this is a one-man operation. So $3 to $3.80, it says. Well, we're already past $3.80, so I would say maybe like $7.50, honestly, if you actually look at the previous price history. So I think this can break out easily to $7 a share. We still have upside, and that's over the last 5 years. If you go back, $7 a share is really the ultimate peak that we've seen in this stock. So I think it can, if gold's hitting all-time highs, why can't BTG? Now, back to the dividend. I want to see what they're paying here, because they were paying a good dividend. I know that, unless they stopped paying the dividend. So let's try to find out what the dividend history is and see if we can locate. So the payouts, they did pay out, it looks like, in 2025. So they have estimated dividends coming up. And if we view all payout history, 2 cents a share. Now, they did have a dividend cut. That's the thing. So just like I think Newmont did, I know we could verify that as well. But income with gold and silver is going to be volatile as it is. But the interesting part, and what I want to know, and what I'd like to see the company, I guess, answer is, why do we have a dividend cut when gold and silver prices are going to the moon? Like, what's going on? Why can we not afford to pay higher dividends? Or are they trying to just save money and reinvest the money, perhaps, because gold, there could be strategy to it, but sometimes when you see a dividend cut, you want to know what the reason is. And yes, the gold and silver mining industry is very volatile, right? But at the same time, it's like, we're seeing dividend cuts on stocks that traditionally, this one I don't think was as severe. It went from 40 cents down to 25 cents. And that happened in 2024. So we've stayed at 25 cents. But hey, I mean, this used to yield 4 or 5% when it was under $40 a share. So there it is right now. We have the risk analysis, gold price volatility, operational risk in mining, all the typical ones, geopolitical risk, environmental and regulatory compliance risk, guys. They are international. Currency risk, think about currency risk as well. It says allocate 2 to 3% of your portfolio to BTG, 12 to 24 month holding period, profit targets and all that. Says $5 a share. Well, if you would have bought this when, I guess this is a little bit outdated. And like I said, you have to be careful with this because it does make mistakes. But it's done pretty well thus far, you have to admit, up until now. So it got the price wrong. So now it's saying $5 a share. I would say $7 a share for BTG as your profit target. So that still implies like 40% upside. And of course, you want to be diversified in this. If you're thinking about, you don't just want to go all in on a stock like BTG at a $6 or $7 billion market cap. You got all these companies. We have B2Gold Corporation. Look at this one, up 65%. But here's the thing, right? You've missed your point of maximum opportunity, like I said. So it is a momentum trade. That's the problem. It's a momentum trade for all of these. Gold fields, look at this one. Up to, it's just crazy, 163%. These things have already gone parabolic. So if gold prices do start to go down, then these stocks, and like I said, from day one, these gold mining stocks and these silver mining stocks are a way to profit from the move in gold and silver. But, you're placing a leveraged bet against these, with these companies. And so when you're buying these stocks, you just have to remember your volatility is likely going to be greater than the actual price of gold and silver, just because of the fact that these are leveraged bets on the price of gold and silver. And Harmony also pays the dividend, only 1% dividend yield. But for those income lovers out there, valuations on these stocks have gone up, and that's one reason we've seen these yields shrink, because it used to be maybe a 2 or 3% yield, and here we are down at 1%. Sibanye Stillwater, right? This one is more of a silver miner, I think, if I'm not mistaken, but it spans over 5 continents. So regardless, these companies are a way to hedge inflation, even at the inflated valuations, even if you're buying them for long-term growth and you don't care that you're paying a valuation that's a little bit elevated. You can always dollar cost average into them. Here they are. These are a lot of companies, but check out our AI tool here. Like if you want to type in, for example, this company, it should pull up a report. It should be able to give you information on it, and it can even give you a rating. It can give you information that might be helpful to you as an investor. It gives you an executive summary, and it also gives you the ability to download the information. And like I said, it's not perfect, but if we look at Sibanye Stillwater at $10.30 a share, it gets the price correct. There it is. So it says in this case up to 21% upside. Now let's download the PDF because I want to see the executive summary within the PDF. And this is for any of them. You can do this. You can actually go here and just download the executive summary. It gives you the buy rating and everything else. And so there it is, right in front of your face. You can look at the cash flow analysis and all that, and what they might have in terms of potential allocations and potential risk and everything. Support levels, resistance levels, everything's included. So if you guys are interested, check it out in the description. And thank you so much for tuning into this video. These have been some gold and silver mining stocks that could do well out there. So if you like this content, consider hitting the subscribe button. Thank you so much for tuning in. Hit that thumbs up button to help out as well. And we will see you all in the next one. Take care.